The Spin-off Podcast Network.
K-pop to me means more than just listening to music. It's learning to be myself.
The Spin-off's new documentary, K-Pollies, follows 3 Pacific youth obsessed with K-pop. In a one-off documentary, see what they've found in Korean pop culture and how they bridge it with their own.
When you start dressing, looking different, everyone side-eyes you. But in K-pop, they're just like, no, like celebrate yourself.
Watch K-Pollies today at thespinoff.co.nz/videos. Made with the support of New Zealand On Air. You're listening to Business is Boring, a podcast that reckons it's anything but. Business is Boring is brought to you by Spark Lab, offering inspiration and practical advice to help businesses find their edge. To hear more about Spark Lab, including details about the latest events, workshops, and business tools, visit sparklab.co.nz. And now, here's your host, Simon Pound.
You're listening to Business is Boring, a podcast that reckons it's anything but. Business is Boring is made by The Spin-off with help from Callaghan Innovation. Here's your host, Simon Pound.
One of the common kind of bleats from this podcast is that as a country, we invest too much in unproductive assets like houses and interest payments and not enough into companies. One of the reasons we're like this is that it actually just isn't that easy to invest in other stuff. In order to get into something like shares, there are risks. And also, you need to get a diverse range of investments to spread that risk. There are managed funds full of fees and large sums needed to invest. There's share trading through a bank, but with $30 each brokerage, you need to be doing more than about $2,000 at a time, or else the fees are more than a 6% return. It just isn't that easy. Enter Sharesies, a cool new idea that makes it easy to invest. Simply set your industry preference, risk appetite, and get started with as little as, say, $50 a go. It aims to increase financial literacy and get more people into good investment practice. And its promise that I absolutely love is that you don't need to be rich to have a share portfolio anymore. To chat about all things Sharesies, co-founder and CEO Brooke Anderson joins me now. G'day, Brooke.
Hey, thanks for having me.
Hey, thank you so much for coming up. What a cool idea. Tell me, how did you guys come up with Sharesies? And is that a fair kind of elevator pitch description of it?
It's
what
a
have we
great
mixed?
elevator pitch. So there's 7 of us that founded Sharesies, which is quite a big team. And how we started sounds really convoluted, but happened really naturally. So it all started with Sonia, who was like, I want to be able to get into investing. She has no investing background or financial background. She's like, I want to get into investing like I can use PowerShop, just buy small investment parcels and build as I go. And so she was talking to Leighton, who started an investment club when he was 17, where him and his friends put $50 away each week. And as that built, they got to start investing in things like a herd of cows, a chicken farm in the Philippines, commercial property. So Sonia and Leighton started talking about maybe there's a way like that. And so then I got involved because I've got a bit of finance background and always been interested in starting a business. And then the rest of the team came in too, and we all huddled together, and then Sharesies was born.
That's so cool. Where did you guys actually meet? Were you a group of friends? So the 7 that got started?
Yeah, so Leighton, Sonia and John worked at Kiwibank at the time, and I used to work at Kiwibank, but I was at Xero, so I knew Leighton and, Leighton's my husband, and John. And then Leighton plays in a band where one of our developers is, and Ben, our designer, is Sonia's partner. So, it's all this interconnected web.
And between the 7 of you guys would know every single person in Wellington.
Potentially.
Yeah.
It's a small place.
Yeah, that's such a cool, natural way for it to start. And that idea of the investment club, I love that. So Leighton was organised and onto it enough as a high school student to to stitch this together. How have they gone, just out of interest, with their investments?
Incredibly well. I think what's really interesting is it's been going for, 11 years or 13 years now, and nobody has missed a payment. And Layden talks about, when he was a student and he was, living off his credit card, and it probably made more financial sense to stop putting the $50 in. But you had that power of the group, and you knew you had a bigger, a purpose than just, making ends meet that week. So I guess it's pretty amazing that they've continuously, and still to this day, put $50 away a week. And they didn't really know how to invest at that time. You started with $50, built that up in a bank account, and then started to find opportunities.
And that idea of a share club, so did they have different people come and say, hey, I've got an idea for an investment, and do the research and kind of pitch it to the group as well, so they increase that literacy?
Exactly. I mean, now it's all run through a Facebook group because they're all over the world, as they've gone on from university or working. And they bring different ideas, and really different ideas to the club, and then they vote on them.
Okay, so you guys have got this cool idea that takes something that's kind of real and a bit analog, like a little kind of like club of people, and then you turn it into a tech product that anyone can get involved with. What's involved with that? Like, how does one go about starting an investment product?
Well, fintech is highly regulated, so the first thing that, coming from a banking experience, I knew that we would be facing quite a lot of regulation. And it's really important we understand that, because it's all there to help protect customers and their money. So quickly we wanted to understand, okay, if we wanted to start something like this, what does the environment look like from a regulatory perspective? So we worked really closely with the Financial Markets Authority, got some top lawyers involved who are super keen to help us pretty much pro bono at the start, and came up with a bit of a framework of how Sharesies could operate. So it's not actually operating like an investment club right now, but that's something we want to move into in the future. But essentially, somebody can start investing with, say, $30 or even $5 into a range, or into 6. Right now, it's 6 investment options on our platform, which will be growing over time. So how we've started, actually, is we've teamed up with NZX Smart Shares, and they offer a range of exchange-traded funds. So on our platform right now, we don't offer individual shares, say, in Spark or Xero, but we offer exchange traded funds, so it's like a basket, so you can invest in New Zealand's top 50 companies in one basket, so your risk is a bit more the fund's a bit more diversified. So we've got 6 offers like that, and there's US top 500, Australian resources, Australian top 20, and NZ bonds. So there's a range of kind of risk profiles too in those funds that we offer. And essentially how a customer gets in is they sign up to Sharesies, then they can place their investments. And then the investment's actually held under Sharesies nominee in their name.
Cool. So you jump on, you pick your industry. So you're like, I like the idea of American tech stocks, then that's maybe a higher risk profile, and you choose your risk profile. So does your risk profile put you into certain industries, or do industries put you into certain risks? Yeah,
it's quite interesting. So how we've helped people determine their risk profile is we've teamed up with Sorted and offered their calculator through our platform. It's really good in terms of asking a few basic questions and help you understand, should you be investing in growth or balanced, or are you a bit of a conservative investor? And from that, we've taken the risk profile of the funds that we offer and divided them like that. So you can pick the industry or the country you're interested in investing in, and you can see that, does this match my risk profile or not?
Ah, cool. Yeah. And how do users get their money in and out? Is it something like, there are funds that can take years to get your cash out, and shares are very liquid. You can sell them whenever you want. Where do you guys sit on that spectrum? Yeah,
so this is essentially like shares, very liquid. So customers right now in our beta do a bank transfer, or a lot of them are set up automatic payments into Sharesies, and that takes typically 2 days. It's T+2 is the industry standard, so 2 days for your investment to become yours, and then if you want to sell, it's 2 days again to sell down.
And you guys are in beta now,
yes.
And so how many people have you guys had come to join already?
It's astounded us that just how many people we in our beta, it's all about product market fit. Like, will this, what we've created, actually be what customers want? And it's astounded us the growth that we've got. So we've got over 2,100 people on our platform. We've only been out for a month. You know, in our probably audacious business model, we thought 1,000 in the first month would be great. So we've doubled our expectations or our hopes. And it's amazing just seeing how these people behave with their money and how they're getting into investing. What I also love about these users is 80% are under 40, which is so different to how the industry is today. You know, the majority of investors are probably over 50.
You go along to an annual general meeting for any company, and holy heck, it's like a grey power meeting.
Yeah, and we don't ask people if they're male or female, but from the queries we get, I do get a sense that, you know, we've probably got 50-50 women and men using our platform, which again is really great for the industry and just getting people to start understanding how to invest and that they can.
And how do people track their returns? So you guys have an app, is that right?
Yes, yeah. So we've got a web app. We haven't built an app for Android or Apple yet because we're still developing the web app. But essentially you can save it to your home screen and make it feel like an app. So we've built that. So that's how people get into the product in the main way that's how they invest.
And how, like, I mean, you guys haven't been going for a very long time here, but I guess, like, there are two big kind of competing things with investing. Like, people do it because they want to see a return, but good investment is thinking on very long horizons if you're not, like, a day trader. And I imagine you guys are not setting up to be a day trader's platform.
No, not at all. Our philosophy is buy, hold, and whack it on an AP. So, you choose the investments you want, continuously add to it in an amount that you can afford at a time that's right for you. So a lot of people are doing that around their payday, and consistently keep investing. The markets, as we know, go up and down, but if you ride that curve over time, historical evidence shows that you end up doing better off.
Yeah, and I guess there's never, there's that wonderful line that the best time to plant a tree is 30 years ago
yes.
or right now.
Yes.
And so I suppose you can always look at a market and go, oh, it seems to be a bit heated, or there seems to be a lot going on.
Yeah.
But, let's say it does have some form of correction over the next little while. Over time, it still is heading up as the number of people increases and the amount of economic activity increases.
Yeah, exactly.
Yeah, does that worry you guys at all? Like, or do Cassandras come out?
Well, it's quite interesting. I think because right now we're potentially near a peak of the market, or it is quite high, and there's a lot of investment in stocks and shares at the moment. And as we know, it is cyclical, so it can go down. But that's, to be honest, it doesn't worry me. I just want to make sure that people understand that when they start investing, and so we try and make sure that's really clear. Because we're, like I said, the majority of people that are getting into this are under 40. They've got time on their side. They're investing amounts that they can afford. And it's weird. I like to look at it, and I don't know if it's the right way to look at it, but when the market's down, I'm like, it's on sale,
Yes.
So it's if you keep your strategy of investing regularly, you get to buy it at a lower price.
Yeah,
That's how I look at it.
That wonderful advice.
Yeah.
Be
It's
brave.
not advice.
Be brave when others are fearful. Although none of this
That's Warren
constitutes.
Buffett's method.
None of this constitutes investment advice. Just if anyone from a financial management authority is listening.
Just how I look at it.
And how do you guys make money out of this business model? So people put in $50 a week, say, and are there fees on like the weekly thing? Is it a yearly fee? Do you take like a 2 and 20 or something? What do you guys do?
The way that we've structured Sharesies has really baffled the industry because, they definitely make a lot of money on every single trade, and charging brokerage, like you said, $30 in the intro. So how Sharesies makes money is we have a $30 annual subscription fee. So that's what the customer pays. Right now, if they get into our beta, they get $20 in their wallet, though. So that's a pretty good,
Sign me up.
Yeah, get on there. So that's from the customer's point of view, and that's all they pay to pretty much eat as much as they like, buy and sell as much as they like during that year. Then we also make money through the funds that we offer on our platform. We get a distribution rebate from those funds. So they, because we're obviously distributing their products. And then over time, as money is sitting in Sharesies wallets, so customers' wallets, that isn't invested, we do earn interest on that.
Okay, so let's have a look at how jumping back to that brokerage thing. It took me I got excited by shares when anyone who's like a business nerd when I was younger, and had very limited resource, and it took me a while because I was a business nerd but not very onto it, to realize that if I was putting through $500 purchase with a $30 brokerage and then $30 to sell it again, you had to be getting like 20% returns just to break even on your brokerage.
Yeah.
And then you'd have to save up to get all the way up to 2,000 in order to make it worthwhile doing a transaction. And then that could be, a year, and the boat's passed. So the boat sailed. So, it's a fantastic model to have kind of cracked.
Yeah, I think one of the three key reasons why we started Sharesies, or we saw massive problems in this industry, was one, like you said, the minimum buy-in for investing is way too high. If it's in the thousands typically in order to get a return, and most funds expect 10,000 or more.
Yeah.
Second is the jargon. There's so much jargon that scares people off from investing. So we try and eliminate the jargon, but in saying that, we don't want our investors to have a new kind of language or anything, but we try and demystify it and break it down and turn it into everyday language. And then the third way is, the industry definitely is targeted for the wealthy few, and that's what we wanted to stop. We wanted the ability for any New Zealander to have a crack at investing.
Tell me about your journey, Brooke, to being the CEO as well. So you've worked for some of New Zealand's best companies. I met you through Venn and Xero. And what led you to want to jump out of very, very good jobs and very, very good companies and become the founder of this company?
So, I think the number one reason was passion. I'm so passionate about this. From working at Kiwi Bank, I managed their savings and investment and transactional portfolios. And there really got a lot of insight into how New Zealanders behave with our money. And there's actually just 3 simple traits that people who are great savers have compared to others. And the majority of New Zealanders, their bank accounts are going backwards, but there's ways that we could improve that. So I got really passionate about, we need to help Kiwis be better off. So I always had that growing in me. And then joining Xero, I learned a lot about technology and how that can totally disrupt an industry, and the global growth opportunities, and understanding how to grow a brand or a product in a global arena. And so having those 2 skills really helped me in terms of coming to Sharesies from a passion point of view. And then I guess, if you talk to anybody who's worked with me, I've always been quite ambitious. And I've always wanted to be a CEO, and I've always studied the CEOs that I've worked around. And now being a CEO, I have a lot more empathy for them and how they make their decisions and why they care about what they do. And I've always sought out mentors too, to really make sure I'm developing my leadership skills. And I've got a long way to go for sure, but I just love it. It's fire in my belly. Yeah.
So after making the jump to it, like what things have kind of kept with what you expected of being a CEO, and what stuff surprised you?
So what I guess I expected is, what I always looked for in a great CEO was really strong strategic direction and clarity on that. You've really know where you're going, and you hold yourself true to that, because I see where a lot of companies start flailing is when their strategy is not clear, and then the people don't know really what, where they're heading or how they can really help, move the needle. So I think that's really important, and that's something I've learned. People are so important. Just making sure you've got a great culture is pretty much what I think about the most, and I've always cared about that, but that, everyone enjoys coming to work. I'm super lucky, though, that the 7 of us have great relationships. I really don't need to lead them. It's more the company. They are self-starters. They're so driven for the right reasons in terms of Sharesies, and so that's been great. I think what I've learnt is, or what I'm learning is, what should I always be focused on? And something that runs through my head all the time right now is metrics, because that will really move the needle. We've got, we'll do another capital raise in September. I want to make sure we've got a great investor story. What's our next move? Is it the right one? There's so many opportunities facing us that as a team, we're really clear, I guess, on where we're heading and why that's important.
Let's look at that kind of capital piece, because it's so exciting talking to founders with newish companies, and you go out and you do the seed to prove that it works, and then you do your Series A when you've got the kind of like the traction forming. How's that going for you guys, and how do you guys structure it? And at the moment, are you all kind of living on baked beans and like?
So that was my biggest learning in business so far, especially in startup, was capital raising. How do you go about it? How, what do investors care about? How do you get the right investors? It's baffling. I know you talked to Suze recently, and they've invested, which was amazing.
Suze from the Angel Association,
yes. Angel HQ,
and Angel HQ in Wellington. Yeah.
So, it was a massive learning curve. Also, we got a lot of interest because we're on the KiwiBank FinTech Accelerator. And we're in fintech, and there's a lot of investors who are really keen to see this thrive in New Zealand. So we got a lot of interest from investors quite early on, even before we had launched our beta, which in New Zealand is quite rare, we've heard. So we did a pre-seed round, and in that, we had to decide a lot of things. Are we going to value the company? But how do we value the company when we don't have a product out there yet? So we took convertible notes, and then we had more interest in the amount of money we thought we should raise. And so then that was a question. We had to decide, because you had one camp of people saying, take as much money as you can. And then others like, you should, just raise what you need, because obviously you're giving more equity away in the end. And you really still need to prove out that it'll work. So that was, just all of these questions and trying to figure out what was really right for Sharesies was a massive learning curve for all of us. But we're really happy with the strategy we took in the end, where we got a bit from some of the angel groups, some high net worth individuals, and then, the family and friends that are really supportive. And so that helped us get our beta out, where we're all in the product market fit phase. But around September, we'll be raising again, and that will be an equity round, and that's all about helping us scale.
Cool. And what are the plans to scale?
So
it's a global idea?
Yes, definitely. It is a global idea, but we really want to win in New Zealand first and really help New Zealanders get access to investing. That's the core of why we started. Guess it's quite patriotic, so we want to make sure we're really flourishing there. So scale is about getting more people aware of Sharesies, and that investing is something they can do with the amounts that they can afford, and that's really important. And then we're looking at opportunities in Australia and the UK, awesome opportunities from a regulatory point of view there too. We're going to the Rise conference in Hong Kong next week, which is this massive tech conference where we're hoping to, get more exposed to other fintechs or business leaders globally that will help us, really refine that strategy going forward too, into further raises in years.
Cool. And it's just beginning. Oh, that's so exciting. Well, do you have any, I guess you must get asked about advice, just as a last thought. What do you say to someone listening now who's got an idea and wants to be getting in? Like, do you suggest people go and do, like you did, years of working in senior leadership roles in great organizations to get that experience? Was that a good path to your starting this company?
I've reflected on this question this thought quite a lot. I personally, for Sharesies, having the connections I've got, the experience I've got, is really helpful in this fintech area where it is highly regulated. You need to know a lot of people to help you build the business, and so I think that experience is a massive strength that I'm bringing into Sharesies, and the rest of the team. They've got great experience too, but. I remember when I did Young Enterprise at school, and I was so naive about a lot of things, but it was brilliant. I was bold, and I think I had a lot of confidence around it because I didn't know what I didn't know. And in terms of all the jargon and, that's in the business world. And then when you go to university, you learn all this jargon to what you probably do, you do know. And I think that, if somebody's got an idea, just do it, is what I think. I don't think, experience and stuff is really helpful, but you can get that through just, being audacious, making connections with people. In New Zealand, people are so willing to help. And so I've advised somebody on this before, actually, when they were trying to decide to go to university or go hard with their business idea, which is Bonnie from Indigo and Iris. And, ultimately it was her decision, but I'm so proud that she just decided to go full-time on making Indigo and Iris a success and not having to do the corporate career. And she's had amazing opportunities like going to New York with the ambassador or to South Africa. Just all of these opportunities start arising because she's just so bold.
Oh, that's so cool. I'll have to check out her story. Thank you so much, Brooke Anderson, for coming in. If people are interested in having a poke around and seeing a little bit more about the website, it's sharesies.nz. Great idea, really cool. Thanks for coming and chatting to us today.
Yes, thank you so much for having me.
Thank you very much to Madeline Chapman for producing today, and thank you very much for listening. If you are a fan of the spin-off podcasts, please do jump on and give us a review and a like. It really does help. Thanks then.
You've been listening to Business is Boring, presented by Simon Pound. And brought to you by The Spin-Off and Callaghan Innovation.
From the Spin-Off Podcast Network, that was Business is Boring, brought to you by SparkLab. Make sure you're following Business is Boring wherever you get your podcasts. And for more information on SparkLab, visit sparklab.co.nz.
Are you making the most of your KiwiSaver investment? Generate is an award-winning KiwiSaver provider with a track record of strong long-term performance. Making a smart decision now could add tens of thousands of dollars by the time you reach retirement. Book a no-obligation chat with a Generate KiwiSaver advisor today at generatekiwisaver.co.nz/getadvice. A copy of the product disclosure statement is available at generatekiwisaver.co.nz. The issuer of the scheme is Generate Investment Management Limited, and of course, past performance does not guarantee future returns.
The Spin-Off Podcast Network.